Dollar up on interest rate hikes. Bets the dollar become up on Thursday morning in Asia, as U.S. purple warm inflation statistics drove the expectations for greater monetary tightening from the U.S. Federal Reserve. Pushed via each expectancies for faster Federal Reserve policy tightening and safe haven flows amid developing fears of a recession. The U.S. dollar index that tracks the dollar against a basket of other currencies gained 0.43% to 108.42 via 1:34 a.m. Eastern Time, 5:34 a.m. Greenwich Mean Time. The USD/JPY pair jumped 0.69% to 138.37. The AUD/USD pair inched up 0.06% to 0.6764, and the NZD/USD pair inched down 0.09% to 0.6126. The USD/CNY pair edged up 0.15% to 6.7287, whilst the GBP/USD pair fell 0.26% to 1.1859. U.S. Consumer Price Index (CPI) rose to 9.1% in June year-on-year, a four-decade excessive. Expected a reading of 8% whilst 8.6% was recorded in May. Investors speculated whether or not the 9.1% studying marks the peak. The bottom line is U.S. inflation momentum is rising. Commonwealth Bank of Australia (OTC) CMWAY analyst Christina Clifton mentioned in a Be Aware. Stubbornly excessive inflation increases the threat that the FOMC will hold to hike aggressively and trigger a recession, she stated. We anticipate that recession fears will maintain to help USD. Markets anticipated a historical 1 percentage point Fed interest rate hike later this month. Fed Bank of Atlanta President Raphael Bostic said, "The entirety is in play to combat fee pressures." Fed Bank of Cleveland President Loretta Mester instructed that the CPI file changed into uniformly awful and that the critical bank will need to head nicely beyond the neutral level of charges. Other international primary banks are delivering extra economic tightening to carry down the hovering commodity costs. In Asia Pacific, Singapore's central financial institution suddenly tightened financial coverage on Thursday, sending the foreign money higher. Meanwhile, a Chinese principal bank reputable said liquidity in the interbank market is extra than moderately adequate, a sign that similarly price cuts are unlikely.